Good evening and welcome to the Folio Coach, your trusted destination for smart money insights and investment awareness. I am your host, and tonight we bring you a topic that concerns every saver, every investor, and everyone looking for a safe parking place for their money. Our focus tonight: liquid funds. What are liquid funds? Why are investors increasingly moving towards them? And can they be a better option than keeping large sums idle in a savings account? Let's understand. What are liquid funds? Liquid funds are a category of mutual funds that invest in short-term money market instruments such as treasury bills, commercial papers, certificates of deposit, and other highly secured debt instruments with very short maturity periods. In simple words, liquid funds are designed to provide investors with high liquidity, low risk, relatively stable returns. These funds are often considered ideal for short-term cash management. The three major advantages. Now the big question: why are liquid funds becoming so popular among investors? The answer lies in three major advantages. 1. Easy access to money. Unlike many long-term investments, liquid funds allow investors to withdraw money quickly. In many cases, redemption requests are processed within 24 hours. This makes them suitable for emergency funds or temporary parking of surplus cash. 2. Better returns than traditional savings accounts. While savings accounts provide safety, their interest rates are often limited. Liquid funds, on the other hand, may offer comparatively better returns, especially during periods of higher interest rates in the economy. However, experts remind investors that returns are market-linked and not guaranteed. 3. Lower risk. Since liquid funds invest in short-duration and high-quality instruments, they generally carry lower interest rate risk compared to many other debt funds. This makes them one of the relatively safer categories within mutual fund investments. Who should invest? Financial experts say liquid funds may be suitable for salaried individuals maintaining emergency savings, business owners managing short-term cash flow, conservative investors seeking stability, investors waiting for the right opportunity in equity markets. A note on risks. But viewers, every investment comes with some level of risk. Although liquid funds are considered low risk, they are not completely risk-free. Investors should always check the credit quality of the fund portfolio, the expense ratio, historical performance, the reputation of the fund house. Experts also advise investors to match investments with their financial goals and time horizon. Conclusion: liquid funds have emerged as an important financial tool for investors seeking liquidity, stability, and efficient cash management. In a fast-changing financial world, understanding where to keep your money safely while still earning reasonable returns can make a meaningful difference. That's all for today's special report on liquid funds. Thank you for watching the Folio Coach. Stay informed, stay invested, and stay financially aware. Good night.